My name's Chris Mayer. I'm the co-director of the Paul Milstein Center for Real Estate, and I'm really, really pleased to have all of you here today to talk about what is a really important topic, which is trying to understand housing equality, opportunity, and impact in the real estate industry. And I'm joined by three excellent panelists, and we're very much looking forward to having a really interesting conversation. Let me first quickly introduce our panelists, and then we will get started. So I'll do this in alphabetical order. Elena Mccargo is Vice President for Housing Finance Policy at the Urban Institute. I've worked with Elena for a number of years with the Academic Research Council at the Urban Institute. And she is somebody who is, thoughtful and has a long commitment to thinking and understanding homeownership. She's had leadership roles in private sector, public sector, not-for-profit sector. So prior to joining the Urban Institute, which is I would sort of say, a center sort of leaning think tank, Elena was head of CoreLogic Government Services, one of the largest data providers in this, working with federal, state, and government agencies, regulators, and think tanks to deliver data solutions. And prior to that, she's held roles with JP Morgan Chase and Fannie Mae. I'm really pleased to have Elena join us. The second, Martin Muoto, is the CEO and founder managing member of SoLa. SoLa Impact Funds are the largest purchaser of real estate in South LA and are focused on achieving market rate returns while delivering on the mission of doing well by doing good. And I know Martin will talk with a number of examples of what he's doing. SoLa has a $100 million Opportunity Zone fund, is one of the few funds that has been active in deploying capital in LA Opportunity Zones. I think we'll talk a little bit about this issue of whether Opportunity Zones these days are really focused in places where the biggest need is. SoLa also is LA's largest Section 8 landlord. So really impressive set of efforts. Our third panelist, Lisa Wright, is president and CEO of the National Fair Housing Alliance. As president and CEO, Lisa leads the efforts by NFHA and its partners to advance fair housing principles and to preserve and broaden fair housing protections, expanding equal opportunities for millions of Americans. She played a major role in crafting sections of the Dodd-Frank Wall Street Reform Consumer Protection Act, Dodd-Frank for short, and in establishing the Office of Fair Lending within the Consumer Financial Protection Bureau. She is a go-to person in terms of thinking about fair lending. And if you were reading about the million plus forbearances in the world, she was in the Wall Street Journal yesterday, among other things. So I'm very excited to have our panelists. So I'm going to start out. My first question, I gave kind of your bios, but I was maybe hoping that each of you will give a little bit of sort of your background, in particular, how you got interested in doing what you're doing. And I'm going to start in alphabetical order, but we'll move it around. So Elena, maybe you can start us out first.
Happy to. And thank you so much, Chris, and the whole team for the invitation to join the class today. Chris thank you for the introduction and all the background. For me, I've been doing this for a really long time. I mean, pretty much my entire career since I was in college. And even when I was in college, was in financial services and real estate. So, I've really, it's interesting. I've moved, as Chris kind of described my background, I've really moved with a foundation on the business side with a very specific focus on policy into this sort of nonprofit research sector now that just has a much broader, sort of a broader application to a lot of the issues of the day and a lot of the things we're going to talk about today. I have worked in real estate. I have been a lender. I have been an underwriter in a bank. I've moved through my career and really sort of understanding internal operations at a lot of big places. Fannie Mae is one of them and a really important part of the secondary market. And I really was, I learned the whole business really working at Fannie Mae and understanding and working with the large financial institutions and small ones. And then I also worked inside of JP Morgan Chase, leading in a sort of borrower assistance capacity. And this was after the crisis, the last housing crisis, where we were really working on really sort of reallocation of assets, trying to understand how to manage and mitigate against sort of a lot of the things that happened on the backdrop of the last financial crisis, helping borrowers keep, stay in their homes, loss mitigation and servicing and the like. And then Chris mentioned CoreLogic. In my career, in every role that I've ever played has foundationally been driven by data. And I have been, and I just kind of have watched the evolution in this business of how data can really help influence business decision making as well as policy making, kind of at the macro level, big P policy making, as well as policy and practice change inside of organizations. And my work at CoreLogic was really really interesting because the CoreLogic had just an incredible amount of data, and created a government solution specific business to really help federal, state, and local agencies use that data in kind of building out new models of work, whether it was in credit reporting or in real estate transactions or in the mortgage business, as well as just really help drive and use that data more explicitly when thinking about how to make policy change, and also measuring and understanding the implications and impact of that policy on actual results and outcomes for people. So it's been a full evolution of a very diverse set of things that I've done in the past. And at Urban, I really get to use data assets of all kinds, including government data, data that we get contributed from banks and businesses, to understand how all of this is affecting people. And a lot of my work at Urban in the moment and in the last 5 years has been focused a lot on racial equity and the levers that we can pull in terms of really reducing the homeownership gaps, racial wealth gaps, and just the critical sort of structural barriers that have been with this country for decades, for as long as we've known them, and that are really front and center today in all that is happening in the world. And we need to think about as we kind of move towards what is this next, what's this next evolution of our country going to look like in our democracy. I think it's really important that we ask these hard questions. And it also means we need data and evidence to understand that. And then we have a lot of work to do to really help synthesize and integrate that knowledge into businesses and into policy and into government, and into regulation, so that we can really advance what's happening globally. So this is really just a great time and a great set of conversations that we're about to have. And Chris, hopefully that is a good start, and we can move over to Martin.
That sounds great, Elena. And I want to come back to this issue of how we're measuring and thinking about policy. And I think some of the research that you've done, which has really looked at what has turned out to be a shrinking, share of Black homeowners, and trying to understand why that is, and whether, some of the reasons it is and isn't, and what we can do about it, I think is a, conversation we will, continue to have here. So I wanted to turn over to Martin next and ask you the same question, which is, how did you start getting involved in what you're doing? What motivated you? Maybe a little bit of your background and your words.
Sure. Thanks, Chris, for having us, and similarly, thanks for facilitating such an important discussion. I'm perhaps the opposite of Alanna from a thought process standpoint, but working on the same fundamental issue, which is that I grew up in West Africa. I came to the States to go to college. I went, as Chris alluded to Penn and Wharton, perhaps when the standards were lower. And really spent most of my career in private equity and venture capital. Bulk of that was with General Atlantic Partners. For those who don't know, GA has done a lot of great enterprise software and technology companies, including late stage investing in Facebook, Uber, Snap, many of the Alibaba, many of the leading companies, and really learned about sort of how to build excellence in organizations and really ensure that companies are market leaders in their respective domains. So I've always been a pragmatist, and I'm not a thought leader, so I'm a little intimidated by the thought leadership that I share with the other panelists. But I started investing in real estate at nights and weekends, and I invested in Venice, which, if many of you know, it's sort of the Brooklyn of LA. It's gone through explosive growth. Invested in Echo Park, those are both great areas. And as I really looked at the numbers and at the data, what I noticed is that there was pockets in LA that no one was investing in, and yet had pretty decent cap rates and potential returns. And as I drove those areas, I got to know firsthand what is referred to as, we refer to as South LA, but really as South Central, right? And most brokers told me, you must be batshit crazy. You're going to lose you're going to get high delinquencies. Tenants are going to trash your place. You're going to get a lot of evictions. And I sort of was really puzzled. Part of it is that I grew up in West Africa and Northern Nigeria, and I was like, this isn't that tough. But it is historical South Central. And my investment thesis was very simple, which is, even in what has historically been considered tough areas, the vast majority of people are good, hardworking people that want a safe place for their kids. And if you give them a really good product, they will treat it as their home. They will pay rent. They will really invest more in their community. And so that was the simple-minded investment thesis. I bought about 10 buildings using my own capital. As I started to run out of capital, I decided I would very reluctantly take other people's money. Ended up raising a $10 million fund in 2014. That has done very well. Raised a $55 million fund in 2017. And then, in 2019, found out about the opportunity zone legislation. We looked at our portfolio. 2/3 of our buildings were in opportunity zones. Rather, 50% of our buildings were in opportunity zones, and 2/3 would have qualified for the significant improvement test because we put so much money into the buildings. So we started launched an opportunity zone fund when it was still a little bit of a head scratcher. We ended up raising $115 million fairly quickly. It was oversubscribed. The couple of takeaways were that we always believed that social impact and ensuring that our tenants and the community prospered and thrived was good for the fund, and it would really fundamentally improve our returns. And to us, we never understood why that was a surprise to people. I've spoken with dozens of investors that believe, well, do you have to have concessionary returns? And we feel quite the opposite. And there's a African greeting that people say often in Nigeria when they meet you. They go, "How are you doing?" And sort of tongue in cheek, you answer, "Well, I'm doing well if you are doing well." They would say it with that, "I am doing well if you are doing well." And it is that philosophy, which is that we do well if our tenants do well and if the community prospers. And we now have demonstrable examples of really how investing in our tenants, the communities, and really much beyond housing really helps us improve returns. So we'll certainly get to that at that point, but really privileged to be with the masterminds of policy and the thought leaders that I'm joined by.
Great. So let me turn to Lisa, and it would be great for you to give an introduction of yourself, how you kind of got here as well. And I promise we will definitely come back to thinking about why it is that larger investors have not appreciated the opportunities in some of the neighborhoods that you work in. Lisa.
Thanks, Chris. And good afternoon, everyone. It's a pleasure to join you all. My name is Lisa Rice, as Chris mentioned, and I am the president and CEO of the National Fair Housing Alliance. I have been doing this work for quite some time. I refer to myself as a civil rights practitioner, but I've been doing this work for quite some time, over 40 years. I too got started in the 1970s while I was actually in high school. And my area of focus is on fair housing and fair lending. So my work really centers around the elimination of all forms of housing and lending discrimination. And that does include eliminating systemic and structural barriers. And the work also centers around expanding equal housing opportunities. Because a lot of our work is centered around eliminating structural barriers and deconstructing systems that perpetuate discrimination, and then reconstructing and redeveloping systems and fashioning new policies that promote equitable opportunities for people. The work can be difficult. It is long-term work. It's very much long-term work, but it involves a lot of elements, which include education and outreach, because a lot of people don't understand how our existing systems and policies perpetuate inequality and unfairness. So we have to do a lot of training to help people understand how they can think afresh and think anew about the ways that we are providing housing and lending opportunities in this nation. But the work also entails a lot of research-related activities. The Urban Institute is a great partner of ours in that effort. We do not have a research division per se at the National Fair Housing Alliance, but we engage a lot of researchers, economists, statisticians, et cetera, to help advance our research agenda. And then the work does also entail, when necessary, a lot of enforcement, and I can talk about that later on as we delve more into the discussion. But when we do engage in enforcement, we bring systemic cases, and by that what I mean is that our cases are designed to change, to be systems changing. So we want to help fashion a new way forward so that we're expanding equal and fair opportunities for people. I got started in this field quite by accident. I am supposed to be an artist. I am an artist by training and education. My degrees are in fine arts, painting and drawing. But when I was in high school, I participated in a program called Upward Bound. And my first job was at an organization called the Fair Housing Center in Toledo, Ohio. Very serendipitous. The Fair Housing Center, it just so happens, was bringing a bevy of precedent-setting cases using this brand new law called the Federal Fair Housing Act. And the Federal Fair Housing Act had actually been passed as a result of the assassination of Dr. Martin Luther King Jr. The law was passed literally 7 days after Dr. King's assassination. So in the 1970s, it was a nascent law. There was very little legal precedent and development under the Federal Fair Housing Act. And the Toledo Fair Housing Center took it upon themselves to change that paradigm. And so when I was a teenager, here I was, my first job was in this small civil rights agency in the Midwest who was bringing lending redlining cases, insurance redlining cases, real estate sales discrimination cases, and all kinds of cases that were establishing new legal precedent under the Fair Housing Act. It was a very exciting time, and I got bit by the bug. And haven't been able to leave. So that's why I'm here, literally.
Great. By the way, my daughter is a freshman studying design at the moment. So
she's going to be a civil rights activist, Chris.
She definitely, I think and hope, has much more awareness, I think, as many of our young people do, of the importance of a more fair society. I think in a way that, is one of the more refreshing things of what we've seen with the Black Lives Matter movement has been the engagement of a younger generation in important issues. Which, I have hope, but I have 3 daughters, and I can tell you from the conversations we've had at the table, the sense that they're paying attention and their friends are paying attention, many of whom are coming from, relatively privileged backgrounds, but starting to appreciate what, the importance of having an inclusive and fair society. So I want to actually, I'm going to pivot off of the questions I asked a little bit, given the intro conversation. I wanted to talk about kind of how all of you, to various degrees, have either worked inside at times or have focused on large institutions that in many cases have failed communities and neighborhoods. And I maybe start with you, Martin, because General Atlantic is, one of the, biggest brand name venture capital firms around. And you pivoted kind of into real estate in part by seeing what wasn't being done. And then maybe you sort of provide a little more color and maybe, an example of a project or two that you worked on. And I definitely want to come to this question with Lisa and Elena as well. But maybe we'll start with you to kind of give some color on that perspective.
Boy, where do I start? I was 24 years old, making a lot of money and flying around in a private jet. And, 7 years before, I was in northern Nigeria, wondering if what my future would look like. And I never was comfortable in that environment, to be honest. I didn't realize it at the time, but I was really, it didn't feed my soul, but it was incredible and necessary experience, because I think, look, I love the work that Alanna and Lisa are doing on a policy level. It's God's work. It has to be done. They've got to be thoughtful people, really driving policy change and government regulatory change and holding the system accountable. At the same time, what you have to do is be able to get to very wealthy people and get them moving in this direction. And that is what I've been able to spend my time doing. Some of our investors are, certainly most of them are multimillionaires, and some of them are billionaires. And I remember bringing one of them down to South Central, right? He'd been in South LA. He'd been in LA for many years. He's probably worth about $3 billion. And he called me up on a Thursday, and he goes, and I get so many calls from brokers trying to sell me deals. I am somewhat rude on the phone. So if any of you find my number and call, and I go, who's this and what do you want? And he's like, well, it's, so I won't say his name, but, and I go, yeah, what do you want? He goes, well, look, my brother's an investor. He told me good things about you. Can I come down and see your projects today? I go, no, you can't come today. I don't work on a today basis. So we schedule, but I realized who he was. I was like, why don't you come tomorrow? So the next day he comes down to South Central, and we're walking our projects, and we're walking our buildings, and the investments that we put into the apartment and the transformation that happens. And we had some new exciting projects I'll talk to in a second. And he was like, I've been in LA for 40 years, never been to South Central. Right? And so one of the things I strongly believe in is, what we try to create in our social impact is the opportunity for Black and brown young people to see opportunities they wouldn't normally see, to see folks that are driving a Honda this year and have one bakery, and 2 years later they're driving a Lexus and have 2 bakeries. And 5 years later, they're driving a Mercedes and have 5 bakeries, right? to see that day in and day out, which unfortunately does not exist enough in South LA. And so a lot of our social impact initiatives are very intentionally creating those access to opportunities, access to education, and access to exposure. But what I didn't realize is equally important for rich people to see the community, right? And when I say see, I mean see the community, right? Walk a day. And when folks go, I recently did, I try not to do podcasts, and everybody wants to podcast today, and I get asked to speak to a lot of on these forums, but I try not to pass up opportunities to speak to young people and college and post-college young people, because as you heard from Alanna and Lisa, that's when they got the bug. I got the bug a little later. I'm a late bloomer. What I realized is that it's super important for people to really experience what it's like to be poor, what it's like to be disadvantaged. And so in some of these interviews, they go, what should I read? And look, there's great books out there, The Color of Law and other really, but I say what you should do is spend time talking to poor people. I don't spend my time I spend my time talking to poor people. Our offices are at 86th in Vermont. We're about 9 blocks from where Reginald Denny was pulled out of his truck and beat up, in the early 90s, started the LA riots. We're in the community, and that's when you really see what it is like, and you have to deal with all of the issues, all of the frontline issues that are being played out today in America. And so I would encourage all of the students and so on to really find a way to spend time with folks that are in that system. And poor, I just fundamentally say, spend time talking to poor people. They'll give you the answers.
So, I mean, one of the things when you're sort of fundraising, it sounds like it's really high net worth individuals, not institutional investors. Have you talked to institutional investors? How are they thinking about what you're doing? And, start with that.
So we have spoken to, dozens of institutions. For the most part, we've not created a forum for them because they don't. Most of the endowments, pension funds, foundations are not tax-paying entities, and so because we've been focused on the opportunity zone legislation recently, in terms of we have an opportunity zone fund, they don't have that advantage. Certain changes have happened. The banks now are able to invest in opportunity zones and get CRA credit. So they suddenly, but we're probably, without preempting it, we're probably days, maybe weeks away from announcing, a fund that would enable institutions to invest in communities of color. Now, let's be clear, part of the struggle, and I think one of the things that we're working on very hard is, look, I've spent much of my career making rich people richer. And so that's not, that's not the solution. So how we include the community and how we give ownership to the community and how we ensure that the community participates in this is still a challenge. We have some ideas around it, but we still have work to do.
Right. So that's a good transition, I think, to kind of asking the question about wealth building, because there's been a ton of interesting and compelling and depressing research over the last 5 years that's really directly linked embedded discrimination in U.S. housing policies and lending to the lack of wealth accumulation in Black households that has been generational, particularly starting just after World War II with many FHA programs, which are not just about lending to households, but were also about lending to builders and restrictions thereof. And I wanted to maybe, transition first, Elena, and maybe you can talk a little bit about some of the history, what your research has found. And I'd love to come back to the question of why have large institutions failed us so badly, even after the legislation that Lisa was talking about. So in the 60s and 70s, you were getting rid of the legal framework that were preventing households from going, but we've made so little progress since then.
Well, it's a great question, and Lisa should talk about just Dodd-Frank and Too Big to Fail and a lot of that component of this. I will just say, just to sort of really follow on to what Martin was saying, it's an incredible thing, and it's really still an evolution to see people in our work and understand truly how the decisions we're making, whether as business people, as policymakers, are going to impact outcomes for people and outcomes for places. And you've got to understand who are in these communities in order to be inclusive of them in any decisions that are being made from a policy or business standpoint. And that is something, honestly, Chris, and even in the research domain, we're not even there yet, right? In terms of research, we're doing a much better job trying to address that head on. But I just think it's such a crucial point, which, has led us to really, I talked about all the data earlier and how critical that is. Understanding that every data point has a person or a place behind it, and remembering that and understanding how to translate that as you're making decisions. We cannot continue, and this is how business operates. I mean, businesses operate on treasure troves of data that is collected. Investors make decisions on what they're going to invest in because of what the numbers tell them, and what the data is telling them. And I think understanding what that data point translates to is in terms of people in place, really understanding that and bringing that to the forefront needs to be the way forward. We haven't done that enough, and that's the only way that we're going to be able to really address these deep disparities that we see, and really kind of pivot to a place where we really are more outcome driven, really with a social impact perspective. You cannot understand or drive social impact if you do not understand what's in your data. So I just wanted to say that because sort of as a broad statement, and then just like mention to everyone, a lot of the work we've been doing at Urban over the last many years, but has really come to the fore in this sort of social justice movement in this era of the COVID-19 pandemic, has been about racial inequality and ownership. And we have been collecting as much and in every corner at a national and sort of as locally as we possibly can get, information to help us understand why these gaps persist in wealth building along racial lines and home ownership, which plays a huge role in overall wealth. Home ownership and property ownership, I should say, plays a huge role in overall wealth building. It has historically. Chris, you and Lori Goodman, my partner, wrote an amazing paper with all the history and even looking at sort of the global context of what that means. Home ownership in America is typically, and property ownership typically and historically has been the biggest driver of wealth for all families. And we have not seen that equitable opportunity made available to families of color. And we have really been focused on trying to unpack why that is and explain these gaps and try to find ways to fill the void through policy. And frankly, it does require not just policy making, but business practice and massive change in our whole way in which we extend credit, the way we appraise and value property. I mean, all these things, and they make that accessible to people in different ways. So I really liked what Martin said too about I want to connect. I mean, it's really when you're this need to really focus, and it sounds so fundamental and basic, but if you can focus a fund and focus social impact activities and focus business alignment, which a lot of businesses are doing right now through their corporate social responsibility programs, ESG programs, all of those things are really important right now. And that's where you're starting to see particularly in this era of, on the heels of the racial justice movement that and pandemic that's kind of going on at the same time as our public health crisis is, in the wake of George Floyd and everything else, you're starting to hear more corporate voice in this issue, in this matter. And I think it's really, we're just at a crucial point now where I think we can get the focus there, and we're really pivoting as a nation to really start thinking about this and put race front and center. It should not be an alternate variable that gets put into a conversation or a decision. It needs to be a more direct connection as we think about how we make policy, how we make business decisions. We need to be thinking about those people in those places that have been historically disenfranchised for as long as this country has been a country. So the one other thing I just want to mention, and I know we'll get to it later too, and Lisa will probably touch on this, just as a data point for everybody, the Black homeownership rate, just to talk about wealth equity for a second, the Black homeownership rate in America has never reached 50%. So the majority of Black people in this country have always been renters and have not been able to equitably build wealth in ways that that other racial ethnicities have been able to do. There's a lot of historical context to why that is. There is also periods in our history where Black people were building wealth, and these cycles happen where that is taken away from them, and that wealth has been stripped, and we have an intergenerational wealth crisis in Black America right now. And the future, it does not look bright. And Chris talks about depressing research. I am often the author of that depression because the trajectory of wealth building for Black Americans going forward, if you look to 2040, for example, is very grim and is going in the wrong direction. And the homeownership rate sits around 42%, might be a little bit higher than that today for Blacks. Where it sits at about, historically 70% for whites as a comparison point. And that has been through history. And there have not been periods in white America where, farm owners, landowners have been, seen their crops destroyed or their land taken back from them. So something they were building upon has been taken away. So we have a huge legacy of discrimination that is pervaded and is now front and center in our lives, in our politics, in our businesses, and in our policy making. And I just want to foundationally put that out there as this is why this is the time, I think, for us to be having, these really crucial conversations. And it is a requirement that corporations, businesses, government, nonprofits, investors all come together in this conversation as we move forward and keep that people in place in the forefront.
Yeah, I've been reading a book by a Columbia historian who's an expert on the Reconstruction period, just post the Civil War, and the decisions made then not to distribute land when slaves were freed. It can start there. I mean, obviously slavery, these things have a very, very long history that just has repeated itself at different times in different ways. That's depressing. I'll add one other fact that came out of Lori's and my paper to reinforce what you said, Elena. The homeownership rate for whites who have never graduated from high school is higher than the homeownership rate for Black families who are college graduates. It is also true of the life expectancy. So when you think about the inequalities that those policies and decisions have created, and to your point, Martin, it's hard to build and generate wealth for people who have it. Finding ways to create wealth and ownership for people who don't is important and challenging to think about. So Lisa, let me jump in. I think you've probably been biting your tongue. Plus, we'd love to get you to join some comments on the conversation.
So the only thing I'll do is perhaps maybe to help level set. and understand why making advancement has been so difficult is to provide some foundational context, right? And I've actually been giving this speech or an element of what I'm about to say to many of our corporate partners in an effort to get them on board with changing their mindset, changing their policies, changing their systems and programs. And I think this framing has helped people to understand why we need to do a lot more and what specifically we need to do in order to really start making advancements. So when you think about it, my ancestors, Elena's ancestors, if there are any African-American people whose family members have been in this nation for multiple generations, and other people of color as well, right, whose family members have been in this nation for generations, our ancestors, our descendants were brought to this nation for one purpose only. There's only one reason why my African ancestors were brought to this nation, and that was to be an economic base and a financial resource for white people. Black people's reason, our raison d'etre, is to build wealth, not for ourselves, but for others. So even when people of color, when you think about the early colonial period, in the United States, even when people of color were able to obtain their freedom and start to build wealth for their families, it was often taken away either by violence or by court action or by some form of legislation, because the fundamental principle, that fundamental notion that people of color are not supposed to be able to build and obtain wealth for themselves in their own rights. The wealth that they build is really a resource or stored up to provide economic support for white people in America. Anthony Johnson's story is a great example of this. Anthony Johnson was taken from Angola, Africa, and ultimately in 1619 arrived in Jamestown, Virginia. He was in that first crop of about 20 African Americans who were brought from West Africa to be slaves in the United States. After working for about 15 years, he won his freedom. His owner granted him his freedom. Anthony Johnson took all of the knowledge that he had, and with the hard work of his wife and his family members, they ultimately were able to amass some capital. They purchased a plot of land in Maryland, which they turned into a very thriving enterprise. They turned it into a tobacco farm. And upon his death, he bequeathed his land to his family, which is what we all would do, right? But after he passed on that wealth to his family, the local court system actually took it away from his heirs and gave the entire plantation and all of the assets therewith to his white neighbor, because they determined that Mr. Johnson was not a citizen because he was Black. That's the only reason. So his Blackness was enough to disinherit him, to disenfranchise him from all of the rights of citizenship and benefits of coming to this nation and working hard and building a financial enterprise for himself and his families. And our history is filled with stories like this. My own family history is filled with multiple stories like this, where my ancestors garnered a lot of wealth that was literally just taken from them because, again, of this fundamental notion that I've been talking about. And it's been taken away through violence. We all know stories about the Tulsa Massacre. right? The Wilmington Massacre and so forth, and the Memphis Massacre and so forth and so on, when so-called Black Wall Streets were built and then just surreptitiously annihilated through violence and through other actions. The Urban Renewal Program, which was developed under a federal policy under the guise of building wealth in Black neighborhoods, but actually turned out to be a source of wealth depletion and wealth annihilation in Black neighborhoods. My father, for example, owned a business in a Black business district in our hometown of Toledo, Ohio. And because of the Urban Renewal Program, our city came through and wiped out that business district. My father and his other colleagues lost all of their businesses. My father was never able to reestablish that business that he owned, a thriving business, because of that federal policy. And so over and over again, I think Elena even mentioned this, over and over again throughout history, we've seen these instances where Black people build wealth and then the wealth is completely wiped out through federal and local policies that have been put in place. And so when we think of all of these laws, you know, the repatriation programs, the Homeowners Loan Corporation Act, the National Housing Act, the Social Security Act, the National Highway Act, even the CARES Act that was just passed. The CARES Act is another federal law that promotes inequality along racial lines in our nation. We keep doing this over and over and over again. And the reason is because the inequality, the racism is baked into our system, it's baked into our society. So that now, you know, you don't have to do things like we did with the Chinese Exclusion Act or the repatriation laws that were passed 100 years ago, where we explicitly mention race. The inequality is so baked into our system that now we can pass the CARES Act that doesn't mention race at all. But because the inequality is systemic, just by sheer virtue of, for example, favoring a housing safety and housing stability program for homeowners, right, and providing no support for renters at all, will actually fundamentally perpetuate this system of racial inequality that we've been talking about. Our problem is that we've never done anything to rectify the structural unfairness that exists in our society. So when we pass those civil rights laws that I was talking about, the Federal Fair Housing Act, the Community Reinvestment Act, the Equal Credit Opportunity Act, when we passed all of those laws, what we did was we said, going forward, you can't make an individual decision based on a person's race or their national origin that would manifest discrimination against that person. So you can't consider somebody's race going forward. But we left in place the structures and the systems of racism and inequality. So we passed the Federal Fair Housing Act, but we left residential segregation in place, right? We passed the Voting Rights Act, but we left structural inequality in place that foments voter suppression. We passed the Civil Rights Act, but we left in place our system of unfairly funded public schools, right? So we left all of these systems in place. We passed the Equal Credit Opportunity Act, but we left in place the dual credit market, right? And so those systems, residential segregation, the dual credit market, et cetera, they're continuing to do what they were designed to do, which is unfairly provide opportunities for people. And that's why we have to dismantle those systems if we really want to see a fair society. And so the last thing that I'll say is that recently we've been seeing corporations, as they understand this issue, the way that systemic inequality is perpetuated, as they understand it, they've been coming on board more and actually changing their minds about how they think about policy. And I put into the chat box a recent example of that, where financial institutions heretofore were actually opposed to a major civil rights tool that we use to dismantle structural inequality. It's called disparate impact. Disparate impact is where you have a policy or a practice that seems neutral on its face, but the application of that policy has a discriminatory effect. So for example, a lender that says, I will not provide a loan under $100,000, or an insurance company that says, if your house was built before 1950, I'm not going to insure you. That's an example of disparate impact. Policy seems neutral, but its application is discriminatory. And so we've recently been able to get major financial institutions to actually change their position on that policy and send letters to the Department of Housing and Urban Development signaling to HUD that they have in fact changed their positions.
So Lisa, I wanted to follow up on that because that was actually my next question. Martin, I'm coming to you in one minute, but I just wanted to follow up on that point, because that was a bit of a watershed to have some of the lenders actively taking a position on HUD policy in a fairly aggressive way, you know, a number of which in your bio, you're actually sitting on advisory boards working with. Did Black Lives Matter is that the change that happened for those institutions to get them to say, you know what, this is really important? I mean, at least they're making public statements now that I don't think 6 months ago would have been made. Is that a fair observation?
That's a fair observation. And in fact, 6 months ago, these same institutions wrote comments to HUD saying to HUD, yeah, we want to kind of dismantle disparate impact. But I think two things happened. First, COVID happened, and we began, the Urban Institute and other entities started reporting on the racial disparities that we're seeing as a result of COVID. And as a result of that, the leadership in these financial institutions started reaching out to me and other colleagues and saying, why is this happening? And we were able to provide the answers to them and explain that fundamentally our society is unfair because of this long legacy that I've talked to you about. And then Black Lives Matter happened, and the company said, okay, wait a minute. We're getting it now. We understand. I think as the death statistics continued to come out, it really hit people hard. And so, you know, you got to realize that every corporation is not monolithical, right? You've got people in the corporations who, there's a lot of diversity. There's a lot of diversity of thought in these corporations. And one of the things that started happening, Chris, is companies started having really sort of, I'll call them come to Jesus, but honest conversations, internal conversations about diversity, about racism, about exclusion versus inclusion, and how that was happening within the institutions and how it was manifesting externally. And then as we started reaching out to the leadership of the financial institutions, they began to say, you know what, you're right. Now we really need to pivot on this major issue.
So Martin, I'd love to first just have you contribute some comments. I have a question or two as a follow-up, but you've been sitting here patiently and quietly for a while, so I wanted to bring you in.
Well, I think Lisa really outlined the structural problems that the country has been grappling with for 400 plus years, and I think you summarized it incredibly well in that Black people were brought to this country for one reason, which is to work the land, right? It was to work the land, and therefore housing is where a lot of the sins of the past go to die, right? They are buried in the land, right? They're buried in the land. But I do want to pivot for a moment in the interest of time to what can we do about this, right? And many of you are sitting there, you're like, I went to Columbia, I went to get a great education, you're getting a fantastic, you've chosen to be in a field that is really incredibly important to developing solutions, right? And so I got to tell you, my view about this is that, and it may be a little bit just very pragmatic. If you think that the solutions will be resolved on November the 3rd, you're sadly mistaken, right? No matter what happens. Now, 100% vote, 100% vote up and down, really. But the problems are not going to be solved with a change of administration. You know, and I'm going to put my political views aside. It's not going to be solved with a change of administration. And we hope that a new administration is much more inclusive and much more, you know, from what we've seen, there's certainly some hope at the end of the tunnel if things go as our, you know, go in one direction. But the solutions really lie in this room, in this virtual room, right? I got to tell you, it's very clear what the solutions are. Now, how we make it happen is different. But what happened in the Black Lives Movement in the last 180 days is that people went out and said, we're going to hold you accountable. Normal people, young people, Black people, white people, people of every stripe and every income level said, okay, we're going to hold you accountable. Now, we don't want it to be a 180-day movement. So therefore, the solutions lie in this room. And look, the work that Lisa and Alanna are doing in really clear-eyed identifying the problem helps me do what I do, which is to go into the communities with real intention of inclusion and building beyond housing, because, you know, ultimately it's in jobs, it's in access to technology, it's in economic development, it's in free enterprise, and making sure that those systems are also inclusive of Black and brown people. But let me reinforce that all of you on the call have a role in this, which is to hold your institutions accountable, whether that's Columbia or Penn or USC, or whether that's your parents, or whether that's where you spend your money, right? And let me leave you with one request, which is ask for 13. Let me repeat that. Just ask for 13, right? We're aware of the 13th Amendment, right? But 1 to 2% of capital is allocated to Black and brown fund managers. We want 13, right? We want 13. Right? If you start going to the barista at Starbucks and you go, what's your organization doing to address racial inequality? They go, what the hell are you talking about? I'm a barista earning $13 an hour. But you know, when they hear that again and again and again, when the investment committees of the higher institutions, of pension funds, of endowments hear from young people, right? Because it's not going to happen. I got to tell you, I've pitched dozens of times to older folks, and they many times they sort of pat me on the head. They're like, "Oh, isn't that special what you're doing?" No, that's not for us, right? And I'll tell you, we're in the Opportunity Zone committee, in the community rather, and the Opportunity Zones have a dual. You know, they certainly have some controversies. And many folks were very happy that SoLa was out saying, look at the good things we're doing. But when COVID happened, we realized that there would be a disproportionate impact in Black and brown communities. And we realized that we had a responsibility to get ahead of that. And so we started to do a weekly food drive. We got food to our most needy tenants on a weekly basis. We've been doing it for 21 weeks. Our social impact team, which is 8 people large, started to assist our tenants in finding every federal, state, and local form of rental assistance, to what Lisa said, completing the forms. There's not enough out there, but there's stuff. And half of the challenge is simply helping folks navigate the system, right? Most of us around the room may be able to really navigate the applications, but our social impact team was hand-holding folks through that process and doing an incredible job. We can point to close to $180,000 that our tenants received because of our direct intervention. And then we launched what we called the Covid Retraining and Recovery Fund, which was a initiative to get money to help in our community, broader South LA, Watts, Compton. They happen to be 95% of our tenants are people of color, to help people that have been impacted by COVID to go back to school and train for jobs that would be in higher demand post-COVID, because frontline jobs, restaurant, hospitality, have been devastated. That's where our folks are. So we went out and we went to a bunch of these opportunity zone funds and said, listen, this is what we're doing. You don't have to do it with SoLa, you can do your own version, but we as a community have a responsibility to do something to impact the community in a positive way. And we think this is our best idea. By the way, if you've got a better idea, we're all for it. But in the meantime, this is our best idea. We almost gave up. I mean, we raised $250,000 from our investors, which again, when you are to some degree in the room that happens, when you have the relationship with wealthy people, you can ask of these things. But we almost gave up. The other opportunity zone funds similarly said, isn't that special? What you guys are doing, go for it. And then you get that call that you don't expect, which, I got a phone call, which was Oprah Winfrey has heard about what you are doing and would like to talk to you. And I go, Oprah Winfrey? Like right now? You're like, no, not right now. I mean, we schedule these things.
Right now's the problem.
Her people. And anyway, so a week later, we're on the conference call with Oprah and her team, sort of diligencing, okay, what are you doing? And she committed a significant amount of money, over $1 million. And at the end of the presentation, she goes, I love what you're doing. I'm going to commit on one condition, that you do this for my friends. Now, Oprah has richer friends than I do, much more influence. And she not only gave of her time and not only gave of her money, but she gave of her time. And we had conference call after conference call to bring in other people along. So let me end with the point I made, which is that everybody in this room, virtual room, can start to hold their institutions accountable. Your career, you may go on to do the incredibly good work that Lisa and Alanna are doing in the nonprofit sector. It's God's work, it's hard work. I've chosen to be in the private sector. And we're both approaching this from different vantage points. But wherever you go, you may go to the top architectural firms, you may go to some of the top real estate funds and firms. You may come to SoLa Impact and work with us. We have a Columbia student that we've had several Columbia students, and the head of our acquisitions came out of Columbia, is that you've got to hold those organizations accountable. You've got to ask them when you're interviewing the awkward question of, what are you doing to help Black and brown communities? And then they say, well, you go, well, we want 13, right? We want 13. And I use that just only to galvanize the thinking. It should be more, but we're trying to get to first base, maybe second base.
Right. I really appreciate those comments, Martin. And one of the things for our students that's really important is for them to understand the role that they can play in the companies they are working for. And we're a business school. We are not a public policy school, which doesn't mean that public policy is unimportant. But one of the themes that I think we've talked about here that is really critical is the role of, investors, institutions, the kinds of businesses that we have, and the responsibilities and the importance it is for them to be involved in addressing these issues. Much as I'd like to believe that, politics matters, and it surely does, at the end of the day, change takes place not just because Washington says so, because Washington's just not very good, as you were describing, Lisa, at saying so in ways that are very compelling and the people listen to. But if organizations step up to do things, it's valuable, critical, not just valuable, it's critical for organizations and individuals, because of course there's no such thing as an organization. It is just a set of people that are operating together as you described. I want to ask one other thing on the community front, Martin, which has shown up in a couple of different questions in the chat room, which is, what are the responses in the communities? Have you seen any pushback? There's, you know, gentrification sometimes comes up, and any sort of issues you're seeing for some of the work that you're doing?
You know, it's gentrification comes up. I think that we address it in two fashions. First is that we actively look, and we've been working on ways beyond financial literacy, which is a little bit of a whitewashed way of you know, but to really get from renting to home ownership and wealth building. And I think that, as I said, without preempting it, we're talking to some folks that would fund really significant ways, because fundamentally, while our business model does a lot on the rentings, you know, we primarily do affordable housing, affordable with a small a, meaning that we're using private capital and only private funds. We're a for-profit company, unapologetically so, by the way. But what we believe makes for a thriving community is having economic integration. I've been working on affordable, preserving and building affordable housing for the last 10 years. We've built, you know, we've bought 1,500 units. We're building 1,500 units in South LA. If any of you know about the regulatory bureaucracy of Los Angeles, probably much like New York, it is incredibly difficult. It's the unintended consequences of policy that makes it so difficult, because it's just as difficult to build in South LA as it is in Beverly Hills, but the economics are very different, right? And so you've got to be willing to deal with that brain damage. But all of the affordable housing that I can build is not enough, right? It's only working on one side of the balance sheet. And so what we concluded is you've got to do things to really promote free enterprise and ownership. And so we started a business campus, which we call the Beehive, which is to promote Black and brown and women-owned businesses in the community, to have an ecosystem in close proximity, so that they can, you know, thrive. I still believe capitalism, compassionate capitalism or adjusted capitalism, can lead to great outcomes. And I still have hope. I mean, sometimes I scratch my head often, but it's to, you know, so in addition to providing that physical campus, we have partnered with leading law firms, accounting firms, and compliance firms to enable them to become opportunity zone businesses. You know, one of the things that you hear, and land has been a way of doing this, is tax policy and the transfer of wealth. You know, with tax policy, rich folks know how to arbitrage this ad nauseum. And we got to, you know, make sure that Black and brown folks are also able to get those same legal advantages, right? And so that's one of the things that we're focused on. And we recently signed a lease with South LA Brewery, which is owned by two African-American entrepreneurs that are just incredible. So we really want to enable that. I was speaking to a prospective investor about it, and he goes, "You're building Wakanda." I don't know what it represents, right? I was like, okay, interesting. But it is, you know, I do say, look, it's incredibly exciting. We've got a tremendous amount of attention for it. And what we want to build is that Black Silicon Valley, that ecosystem of minority-owned and women-owned businesses, alongside of non-minority-owned high-growth companies that are working together. And we're asking the tenants of that, of the Beehive, to commit very explicitly to pledge along certain lines in terms of diversity of suppliers, training opportunities, mentor opportunities, hiring. And I'm not meaning just the facilities manager. I mean, you know, executives. And again, I'll give you another example. We got Live Nation to make a significant donation to build out not only a recording studio at the Beehive and a stage, but we want not only the artists to be Black and brown, but the executives behind the artists that are managing them, that are in accounting, that are in finance. We want Black CFOs, right? And they realize this, and to their credit, Live Nation has partnered with us among many other organizations to say, we want Black executives, not just talent in terms of entertainment, but to come alongside. And that pipeline is going to require a decade, but we're committed to it.
Right. It is really inspiring, some of the work you're talking about, and important. And I think one of the things that I do want to come back to give everybody kind of a little bit of a chance to talk about the future and come back to that. And I think you've done a wonderful job on that, Martin. We had a colleague who unfortunately passed last year named Kathy Phillips, who was both a personal inspiration and I think an inspiration more generally in how to think about diversity. She felt really strongly that it is critical to hold people accountable and to measure and to put numbers together and to not just say, not just have good words, but to measure actions because it's the only way to ensure that things happen. And so your 13 seems like a compelling way to kind of say, we need to set some targets here to do things, because good words and good intentions don't necessarily get there. But that's also a controversial, that is certainly a controversial view in many places as well. So I want to kind of go ahead.
Let me just say one more thing, and I apologize, I'm already using my time allocation. But look, there are 3 people of color on the panel, and there's a lot of people not of color in the room. And I got to tell you, listen, it's so important for people that are not of color to hold these institutions and to partner with us in doing it. When Lisa and Alanna and Martin say this, they go, of course they're saying it, right? But when people that are not of color join in that and say, what are you doing for Black? It is a very different dialogue. And so I cannot emphasize and I've been so inspired and grateful for those that have come alongside of us in this. And that really is super important.
Great. Well, and I hope and count on Columbia joining your efforts in looking at the things that we can do as an institution as well, and holding our institution accountable as well, which is part of both this panel and some of the other efforts that we're doing, on our end. So, Alanna, you have been extremely patient. So I'd love to hear, both comments and, trigger a little bit about the future. Any other questions, continue in the chat box. But we will be ending in about 10 minutes. I want to give you and Lisa both an opportunity to add some comments in before we finish up.
Yeah, I'll be brief because Martin hit so many important things, and it's so great to hear from him. We just work in different, just to hear this perspective and the challenge. And I think what I will say, and I come from this because you guys, as I was saying earlier, I come from the business side of things, and I went to business school, and I've morphed into policy. But I do not believe that any change can happen without full collaboration and cooperation between policymaking, government, and business. The enterprise. We all understand fundamentally what drives things and what makes things happen. And, we don't have time to get into the lobby and everything else that happens that really drives policy in a lot of cases. So I'll just say, there's something I talk about. It's like the eyes, and Martin, what you said made me think about the eyes. Think about these eyes looking at you. And it just sort of culminates. It's your 13 concept. This is the eyes, 13 eyes. Intentionality is critical. So we cannot do these things are not going to morph or just happen. You've got to be intentional. This is from a policy standpoint and also from a business practice standpoint, as Martin was saying, holding people accountable, being very intentional about the questions you ask, about where you spend your money, all of that. Intentionality is critical. And in policy right now, being very intentional about thinking about race, thinking about equity. These are not again, just variables that we need to bring into a conversation. These are underpinnings if we're going to have an equitable society and inclusive society. My next point, my next I is inclusion. And I mean, you guys know that just every organization right now, no matter what kind of organization it is, including nonprofits like the Urban Institute and other organizations, are thinking about diversity and thinking about inclusion and thinking about how their work can drive and more inclusive communities and inclusivity overall. And so that's the other I. And then Chris, really to answer your question about the business's role in all of this, it's imperative. It's not just we'll get some along. It is imperative that we have business alongside as regulation is being made and as everything else is happening. I think these are really important things to keep in mind as you are navigating where you're going to work, navigating your just day-to-day life and who you're doing business with and transacting with. And I really, I really just think that, I'll just end on just sort of the necessity and the imperative of how things get done requires many, many actors. Government and policy alone will solve none. Business driving a particular agenda won't solve. It's got to be a partnership and a collaboration that is intentional, inclusive, and will really lead us to change. And in my entire career, I have seen nothing the things that I have seen that have worked have had those components and ingredients in them. And so I think it's just really important to think about that as you kind of move forward in career and inside of institutions that everybody's working with to challenge and require and ensure that people are following those principles. So I'll stop there and let Lisa wrap us.
Lisa, you have the last word on the panel.
Sure. So I'm going to stay with the 13 Eyes theme. And I don't know, Martin, if you named all of them, but I'm just thinking of looping off of what Elena said when what immediately came to my mind was intersectionality and innovation. And we've been talking about that a lot. Elena and I, our organizations are partnering on a new initiative called the Keys Unlock Dreams Initiative, which is designed to advance policies and programs and investments to expand homeownership opportunities, sustainable homeownership opportunities for people of color and other underserved groups. We're going to be focusing on 11 markets initially, and we hope to scale it and expand it to other markets as we move forward. But we have to address at the local level and at the federal level the structures and the policies that are really blocking the ability of people of color to access quality credit and to access affordable housing opportunities. Now, let me hasten to say, because I want to disabuse people of the notion, oftentimes when we talk about fair housing issues and structural racism, we tend to focus on low-income issues. Like we sort of use that as a euphemism, and I want to caution us against doing that. I just worked a case literally last week where an affluent Black couple was trying to buy a multi-million-dollar home and they were discriminated against. So I don't want anyone to think that, oh, well, this is an issue of economics, right? And we have these structural issues because of classism. No, it's classism and racism. They're working hand in hand, and we have to have policies that deconstruct both of those elements in our society. But the intersectionality piece is so important because, as Elena just said, you can't silo these issues. They're interdisciplinary, and we have got to work together, not only across disciplines and sectors, but across groups if you will allow me to use that term, in order to fashion a new way forward. The second thing I will mention along the lines of innovation is tech equity. And the National Fair Housing Alliance is next in a couple of weeks going to be announcing a new initiative that we're undertaking, our Tech Equity Initiative, in order to help develop new technologies that will minimize and de-bias our systems. I mean, when you think about it, in most businesses, the area where people are still investing and making changes, systems change, is in the area of new technologies that they are onboarding. But oftentimes, technology can manifest bias. So think facial recognition systems, credit scoring systems, risk-based pricing systems, algorithmic-based systems that we're using in our educational space, in a criminal justice space. Many of these technologies manifest bias and discrimination, but we have new technological tools that can actually de-bias existing systems, but we also have methodologies that can help create more fair and equitable tech as we develop new mechanisms and utilities that we're bringing on market. And so our Tech Equity Initiative will be designed to help promote, not only build some of those de-biasing tools, but to really promote their use in the broader society. And I'll stop there, and thank you so much for having me.
Great. Lisa, Elena, Martin, I just wanted to give my sincere thanks for the three of you for your time and energy, both in what you're doing in your careers and organizations, but all, particularly for joining us today. And it was really, I think a compelling conversation. This is one that I think we, at the business school and with our students are going to continue over the course of what we're doing. And some of the conversations that we had, including references that are flying through the chat box, are going to be showing up in some of what we're doing in the classes. We are going to talk about some of these issues and, continue the conversation on our end. So I wanted to thank you so much for joining us and, for giving your time today and for the work that you're doing. So thanks a lot. And, we appreciate it all, and have a great weekend.